Greetings from Georgian Bay on the shores of Canada's Lake Huron. My name is Steve Perry, and I'm the principal of Skara Brae Strategy Consultants Limited. And I'm here today to announce our upcoming three-part series on preserving founders' equity. This series is a compilation of data, of information that highlights the opportunity for you to raise less dilutive capital here in Canada using a variety of structures that cross the boundaries between public and private market finance. It's this unique ecosystem, which we'll be talking about as the open source Canadian financing ecosystem, that really drives the opportunity. And I think it provides an alternative to traditional US-based venture capital finance that you should really consider as you develop ways to finance your company going forward. I'll show you a few pieces of information that give you a sense about what this series will be about. And we'll start with information about the scale of the Canadian business. This year, Canada raised almost $10 billion in venture capital from public and private market sources. Those public market sources, dominantly the Toronto Venture Stock Exchange and the Canadian Stock Exchange, accounted for more than 70% of the total capital raised, a remarkable variation from what you'll see in the United States. Importantly, this is a blend between public and private market finance that really creates an entirely unique and flexible series of alternatives for you to finance your company. Let's talk a little bit about a second data set, which is about the history and some of the dynamics in the US marketplace today. I'll start with this data on seed financing. You can see that angel investors have pretty much held steady with about a $500,000 typical first round. By contrast, venture rounds have been climbing steadily in recent years. This is even more pronounced in larger and later stage venture financing rounds. Contrast that with the performance seen by VCs over the same time frame. This is really quite interesting. It's taking more deals to generate an exit for VCs today than it has in the past. So while round size is increasing, it's taking more deals to create an exit. That tells you more and more value has to be concentrated into fewer and fewer deals. This is one of the key messages I'll be talking about and one of the key trends that I think drive challenges to preserving founders' equity using traditional financial sources. Really, a lot of this is going to be about the venerable common share and how you can use common shares, both private and public, to extend your ownership of the company, to retain control as you go through these critical early years of the company. I'll leave it at that and look forward to talking to you further. If you want to get a hold of me, here's my email address, or you can reach me through the company's website. I look forward and I'm very excited to share our three-part series with you and talking further.